Hello, everybody. It is Ryan here from HappyTrader.io, CEO and head quant. Wanted to do a video on crude oil futures, the CL. This is a big one for a lot of you out there who enjoy trading commodities. Now, I like to give a little bit of context and a little bit of backstory prior to getting straight into things. So, what you have to realize about crude is that it is a commodity, and for something like a commodity, it can go up, it can go down. It doesn't necessarily have I don't want to say the word guarantee, but I want to say it doesn't have the upward drift, let's call it, that something like the equity market would have. So it doesn't have the expected upward drift that something like the equity market would have over time, right? So, there are many factors affecting this, like EVs, hydrogen, which is on the horizon, lots and lots of things, right? But at the end of the day, mostly everything uses oil, as far as transportation. Right now, we are starting to get into, an area where things might change a little bit. So this is actually a great opportunity to look at oil in the context of Happy Trader and how we use our indicator and how we can use our indicator to trade a commodity that is ultra volatile. So we're going to run a couple back tests. These are going to be long and short back tests because we are going to assume that, like I said, there's not that implied and implicit, upward draft. Because let's say, for instance, we become less reliant on oil, or, geopolitical whatevers change the price of oil and change the direction of oil. There's moves to be had on both sides of oil, and a lot of times they are more dramatic than the moves to be had in the equity markets. With that being said, let's hop into it. We are going to look at the long and the short. We're going to go into a few different back tests. So essentially, let's before we look at our deep back tester, what we are doing here is we are entering on the buy signals, and we are just going one contract long on the CL. So that's going to be your standard size crude oil futures contract. We're going to do one order to buy AI, and as you can see, if we had a sell order up, it's going to close that order prior and then buy, and then it's going to do the same thing. So it's going to close that buy order, as you can see right there, superimposed close entry order by AI, and then it's going to subsequently sell a contract, right? So that's what we're getting with the long and the short. So we're just going from uptrend to downtrend to uptrend to downtrend, buying, selling. So we're net one long, net one short. You get the idea. So what we're going to do is, well, actually, I want to preface this by saying that with something like crude oil, there's another aspect besides the upward drift concept that I just explained. And it's that with crude oil, there is nothing necessarily pinning that commodity or arbitraging that commodity, such as with the ES futures, which are being pinned and arbed by the SPX or the SPY index or whatever you want to refer to it as, just the S&P 500, right? There's not that inherent arbitrage that's going to keep these futures necessarily in line. Now, what I am going to go over is some mitigation strategies that maybe you could use. So this is going to be an interesting, not only interesting back testing video, but interesting for the fact of I'm going to show you some options for what you can do when you start to get underwater on some of these trades in crude oil, and how to ultimately become much more profitable in your trading by using a few techniques. Now, one last preface before we get into the back test is that when we're saying we're going from the uptrend to the downtrend signal to back test, that does not mean that that is how you have to trade Happy Trader. With big commodities like oil, natural gas, and gold, you can take small moves and take profit off the table before you ever get to the point of hitting your next signal, especially if you run into a sell signal here way before you get into your downtrend. If you get an uptrend signal that's close to a buy, that's going to still signify amplitude, like we mentioned in our other videos for happytrader.io, and our indicator, which is what you're looking at right here. And if we take away the indicator, it's kind of a mystery. You don't know what's going on. We can just kind of compress the chart and you can just see it's just whatever, right? We don't know what's happening other than, oh, we saw a red candle. Is that going to continue? Now, when we turn on the indicator, you get kind of a glimpse under the hood, so to speak, because we're using a lot of different metrics that have been tested for the last 2 years before we have just now released our second iteration of Sentiment AI with Illumitrends. So we're using a lot of different metrics to allow this to work, and just shout out to TradingView for being such a great platform. So let's get into some back testing. We're going to enable the long and the short back test, and we are going to also drag up our back tester. We're going to make sure deep back testing is toggled on. That's going to give us our date range. We're going to go just year to date 2023. So we're going to switch this to the 29th and generate a report. This is going to be for the 1 minute chart, going signal to signal only, and let's see how it does. So overall, not terrible. Now, let's go over parameters first. So for our margin, just for the sake of minimalist and for the sake of most traders who are watching this video, probably are low or smaller account traders, retail traders. We're not really selling our product to institutions, right? So we don't do that. We're in the market of, we want to help retail traders who have small accounts make more money. Period. That's our mission. We want to empower retail traders. That's been our mission since day one. So we're going to start with a $1,000 initial capital. We're going to start with the base currency. Of course, it's going to be US dollars, obviously, for us. Being in the United States, we're going to do an order size of one contract. And for pyramiding, we are not going to pyramid orders, and we will not make any orders in successive entries in successive directions. Meaning, if we get an double uptrend or a double downtrend, we're not entering in. So with that being said, we're going to set all of those parameters. I like to toggle back a day, clear the back test after getting into the settings, go into another date. Let's pull the 28th, and then let's just refresh the 29th and make sure that we are loading this back test. And there it is on the 1 minute chart. You can see super choppy. This would be a lot of trades. This is for somebody who is a hardcore day trader. You're going to do 651%. Now let's move back out into a more realistic time frame for trading oil commodities, like the 45-minute chart. And before I switch over, you can see 3,400 trades, right? When we move to the 45-minute chart, let's see what happens here. So we'll get into the 45-minute chart, and you can see that the graph looks a lot different, right? So we had a really good gain on the 1 minute chart, but it had a lot of trades. Now, one thing you have to realize with trading is there's no free lunch. There's going to be trade-offs. Now, you're seeing here, if you look at the equity curve, you can see that we quickly went negative on the long and short strategy. Now, again, I just want to touch on the fact that when you're trading with happytrader.io and you're using this indicator, we're going to go to some of these signals and stretch the chart out, and you can see that these moves on this underlying with this kind of notional value on the CL is going to result in some crazy moves. And any responsible trader, once they see a signal, once they get a signal, let's say we get our buy signal, we start to see a green drift up on our Illuma trend, and then we finally get our uptrend signal to place a trade or to give us a trade idea. Well, if we're coming in on that trade and then we're on the 45-minute chart, we're on a very long time frame, it's Friday on this particular move. I'm probably closing this trade on this little bit, right? I'm not going to wait over the weekend to see what oil does and then wait for the downtrend all the way on Wednesday on the 45-minute chart. So just keep that in mind when you look at these back tests. They are not necessarily indicative of a scalping or a shorter term strategy or a hedged strategy. And that's what I want to touch on here. So you can see with the back tests, just doing this, let's say, I, the most rudimentary way, which is just trading from uptrend to downtrend, you can see that, 1400% is very impressive. This is better than, hugely better than what the S&P 500 performs. But even by these standards of oil, natural gas, commodity, soybean, the CME, the NYMEX markets, you know, this is an extraordinary gain. Now, with those types of gains, there's going to be trade offs, and I'm just going to briefly go over what those trade offs are. So, we're not going to make this video too much longer. I'm going to cut to it. 112 trades, so that's going to be in the winning column. We have a $14,000 net profit with a 1,400% gain, net gain. That's in the positive column. We have a percent profitable of 35.71%. Now, that's in green, but that's actually a negative against us. We're only winning a little more than 1 out of 3 trades. But the beauty of that is that's exactly how we designed Sentiment AI, is to be at about, regardless of the instrument that you're using, about that percent profitable, and have a profit factor that's solid, and have the average trade winner significantly bigger than the average trade loser. So, meaning if you're winning 1 out of 3 trades or slightly better, you're going to have the winning trades are going to outperform. As you can see, the white trade here, the very last trade, up to date, we have a $1,700 winner on one single contract, which is extraordinary, following a $40 loser and a big whopper of a $790 loser. But if we just keep scrolling down, you can see we'll get strings of winners. And then, of course, you're going to get strings of losers as well, especially with crude. This is an extremely volatile instrument, so you just have to be aware of that. But overall, your winners are going to outperform your losers. And then you're able to also, in back testing, see kind of gross profit minus gross loss is going to be your net profit. And that's how we arrive there. So you have to be ready to take some drawdown. Now, with that being said, this equity curve compared to something like when we trade the NASDAQ or the ES, where it just kind of might jut down a tiny bit, and then we just have this big upward trajectory. Well, that's because we designed Sentiment AI against the equities markets and against arbitrage markets in general. So that's where you're going to run into when you're trading crude. You'll still get a solid return even trading the regular way. But if you implement your own, like if you are a trader of these commodities and you're using our tool as an additional confirmation tool for you, and then you have your own strategy, well, you're not going to be trading necessarily from our uptrend signals to our downtrend signals. So I just wanted to go over that. Another thing would be hedging. Very important, to where if you get into a strategy and it starts drawing down immediately, and then we hit about, let's say we start with $1,000 and we draw down to a negative 1680, and then we peak our head back up. Well, what a lot of folks will do is they'll just cut the strategy off and they'll just write it off. But we have the fortunate ability to write these back testers, and we're able to see kind of what's going on. So what you can do is when you start to see these drawdowns and you're in a strategy that back tests well, you can become delta neutral by simply taking both sides of the market. Now, you don't have to take both sides of the market using the same instrument. You can synthetically achieve this and avoid wash sale or any type of scenarios like that, right? So if you see that your strategy is going negative, take your initial position, delta hedge it. So if you're, one contract long, you can go a contract short, and then, or you could go short options or a number of other ways. And then once your initial position gets its head above water, somewhere over here, you can start to peel that hedge off and taper that hedge off and allow your strategy to run. But I just wanted to go over a brief back test and show that our indicator is proficient with crude oil. Again, this is Ryan from Happy Trader. Have a great day and happy trading.